way, and I also have Seeking Alpha, although they tend to lag Yahoo a little bit.
All
But
right.
this one they may not, since it's a big one. They may be on the ball and get it published in Seeking Alpha pretty quickly.
Cool. So, hey, everybody, welcome to the live stream. We are going to do a watch party for Nvidia earnings. And I've got Daryl, who's a big contributor to the Discord. He's maybe the number one active user of Discord. So we're going to both be monitoring the website and trying to get our hands on the earnings. And then we're going to compare, how Nvidia did against expectations, how they're guiding, and then look at how their stock is performing. Their stock for the past year is not a very smooth chart, to say the least. And this is a $3 trillion market cap company. So you would expect that it'd be smoother, but it's not. It has swings to the high side and then swings to the low side. So let's monitor the
I think
earnings.
if you look at year to date, they're almost flat.
Yeah, and especially if you go up a little bit, like if you start on June 18th to this moment, you're pretty much flat.
Yep.
So, but Nvidia has been a phenomenal stock for the last 5 years, up 14.
Salesforce just
14%.
reported.
All right, we'll leave that to the end. This
Okay.
is the Nvidia watch party, and CRM will be kind of like an afterthought. It's good to see that they reported, but if anybody in the chat, it's good to see Shadow Guy out there. Anybody in the chat, if you see the earnings drop, please let us know. I'm breaking a record here, folks. I've got 421 and counting. It's really going up. This stream is breaking my personal record on attendees, which
That's
is
great
awesome.
news.
So everybody, if somebody sees the earnings drop, please take a look. And FYI, I've been analyzing Nvidia for a long time, but specifically for a year, I've really have analyzed this stock no less than 20 times. Here's their valuation as it stands. I haven't touched it. Once we get the earnings, I think the stock's overpriced by 44%. I've made videos on my channel for well over a year. I've been consistent. And when I made videos a year ago, I think some people were like, really questioning if I really, was at all accurate. But I think over time, even some of those naysayers were like, okay, so maybe you did make a few points. And I think the stock has traded, pretty much close to where it was about a year ago. It had a really low, but that's all stocks were down in April. So, so we've got a lot of people that have looked at Nvidia. It has been an incredible stock. It's risen with the whole build out of AI in the data center, and we'll see what they announce. So I'm going to keep hitting refresh again. Whomever gets their eyes on the earnings, please put it in the chat. It is great to have everybody. Sergio, very good to see you. We got people in Europe on the stream. Android PC, how you doing, man? Some of the usual attendees are on, and everybody monitor your computers. Let's see when this Nvidia earnings will be dropped. I'll be checking multiple sites, seeing where we're at. So, man, Nvidia, I've heard it 1,000 times in the last 2 days. It's just been talked about so much. We're finally getting here. And I think what's interesting about the earnings, and I'll point it out later, is sequentially, I'm looking at Nvidia's revenue growth year over year, but I'm also looking at sequential growth because I think that gives us the pattern of what's coming in the future. So we'll be able to look at, I think, 4 quarters that are showing a slowing of revenue because, frankly, you can't get this to the size of Nvidia and have the same percentage growth. It's just impossible. But I think sequentially we can start to imagine and forecast a logical forecast for the next 12 months, and then that could lead to a good forecast of free cash flows, and that would lead to a good forecast and valuation of the company. What I plan to do on this is once we get the earnings, we're going to read through it, and I'm going to update my valuation schedule, which is based on free cash flows, discounting free cash flows, and trying to get a present value of those cash flows to today's value. That's how I value company. That's how a lot of investors value companies. I'm also going to look at earnings per share and value the company based on earnings per share and see what intrinsic value we come up with, and then have some observations. I'll let Daryl share his opinion once we get through it. I'll definitely share my opinion on it as well. Saeed, very good to see you. The newest member of our channel, Saeed, great to have you. Thanks for joining, by the way. All right, so come on, Nvidia. Let's produce that earnings report. And any comments you'd add on Nvidia, Daryl?
Not at the moment. I'm going to look at what if, because they give the time that it's actually scheduled for. So I should have done that before. Okay, they're at 20 minutes after.
Okay.
Yeah, they're
All right, so
scheduled for 15:20.
Huh. Okay. Well, just real quick, we're gonna take a glance at CRM, but we're not gonna look at it in its entirety because I don't want to get too wrapped up in it, and then we miss kind of like the update on. Well, it looks like it's trading up, so the earnings were good, and I'm glad because I own CRM.
Yeah, they beat on the top and bottom line by 3 cents on earnings per share
Okay.
and 80 million on revenue.
All right, good news. And what we're going to do is we're going to cover Nvidia, and if we have time, we're going to cover Salesforce toward the end of the stream. And if we have time, there's like another 10 earnings that are interesting, including Hewlett Packard. We'll cover Hewlett Packard if we have time. But the main thing that we want to cover is Nvidia. And let's go back to the chart while we wait. And please monitor Daryl, you monitor to see when it drops, and then I could switch over to that as soon as possible.
Okay.
So I'm going to compare Nvidia to Microsoft, which is the other trillion-dollar market cap company. I'm also going to compare it to the S&P, and the Nvidia has really taken the S&P by storm, right? And when we look at the year, Nvidia is up 18%, so it wins that contest. Microsoft is up 6%, S&P up 11%. The volatility of Nvidia has been pretty drastic. And more recently, if we look at the last 30 days, Nvidia's had a very good 30 days. 24% up in the last 30 days. Microsoft is up 17%, not bad. The S&P is up 6.5%. So Nvidia stockholders should be happy with the recent increase in the stock price. And I think the earnings that we had a month ago, where a lot of the data center companies, Microsoft Azure, Google Cloud, AWS, they talked about that they just are all in on AI, and they're spending a lot of money in that data center. I think that is a reality that, hey, they're going to need more AI chips from Nvidia, who is the leader. Now, is it gonna stick around? I'm of the belief that the build out is exactly that. They're going to build it, but are you going to continue to have to rebuild at the levels of the capital expense that's being put into AI? I don't think so. I think it's going to be a very big build out, but then revenue will begin to come down. And one stock that this, Nvidia reminds me of is way back in the dot-com days, we had Cisco that was building out the internet. And most definitely Cisco was the real deal. They were growing so fast and their stock just took off and it peaked and then it dropped. Even though the company kept growing really fast, the stock just was priced much lower than its peak because the price of the stock just got way out of hand. And even to this day, Cisco's never gotten to the peak. Even though the company, if you look at the growth of the company, it continued to grow. It doesn't matter. Once the weight of that stock price crashes down, investors don't want anything to do with it because they got burned. They don't want to get burned again. The other company during that era was Intel. Very similar chart. So when I look at Nvidia, is it the next Cisco? I don't know. We'll have to let things play out. But that's what happens when you have infrastructure build out companies is you have a very strong build out, but even when the 5-year, it's showing that it's kind of flat up here for a year. So is it going to go up or down from here? That is the big question. Most definitely it went parabolic starting in end of 2022 is when it started to go up, and it really went up 1,400%. Incredible. So that is what we're dealing with.
I bought it at the end of 2023 at all-time highs when I saw a breakout on the technical chart. And since then, I've traded it 28 times. And it's been a very good producer for me, I'll tell you, because of that volatility that you're pointing out there on the screen.
So how did you make money on Nvidia, Daryl?
Basically trading in and out of it because of that volatility. So I traded it 28 times. I still hold 115 shares at the moment. I did trim on Friday before the earnings. I trimmed about 12% just because it's run up so far since the beginning of April. I figured that it's probably had a pretty good run and not going to run up much more. I could be wrong. Hope I'm wrong. But anyway, basically just trading in and out. So like I said, I've made 28 trades on that. Well, I still hold a core position of around 115 shares at the moment.
Nicely done.
So the win rate on that is 79%. And for every dollar I've lost on it, I've made $3.53.
Nicely done. All right, so
we got about 3 minutes.
looks like Jay Zev is on. Thanks for joining. Everybody, we are streaming, waiting for Nvidia to drop their earnings. Then we're going to review it and see if we can determine if they beat expectations or if they didn't, and try to find out what is the guidance they're providing. And then we'll process that. We'll get into some conversations and then evaluation of Nvidia, updating my valuation based on free cash flows, discounting those free cash flows, as well as earnings per share, and then discounting those earnings per share. So as soon as we get that report, we will start getting into our work. So let's see here.
And HP just reported as well.
Hewlett Packard, one of the old school companies.
Yeah, I have a long history with them.
Hi, Mikhail. Thanks for joining. Appreciate it. No report yet. Come on, Nvidia. So I saw a headline earlier today that the Trump administration was asking companies not to sell to Chinese customers. And I know Synopsys, which is a company that helps semiconductor companies test out their semiconductors once they've produced a new generation semiconductor, their stock really went down on that news. And I didn't see that Nvidia stock was affected by that story. I guess the Trump administration's affecting the companies like the ASMLs, Synopsys of the world that, hey, don't enable the Chinese semiconductor companies to have the same, I guess, advantages that U.S. based semiconductor companies have. That was what I got out of that report. Did you notice that report earlier today?
I did not see that report. No.
Yeah, I read into it.
I'm getting ready for a trip, so I haven't been watching the markets very much this afternoon.
So we're at 120, and you saw somewhere where they were going to drop it at 120.
Yep, your time.
So, well, it's going up. Is it released?
Evidently, they have reported. I don't see it's dropped yet, but the app What If is actually analyzing the returns at the moment, so I presume they have them in their hands.
So this is May 22nd. That's not it.
Okay, there they are from Yahoo.
So you're seeing them on Yahoo.
Yes, I just saw them post. They haven't actually dropped the article. I just saw an alert. And unfortunately, I didn't read the alert before I touched it. But Nvidia is up in the after hours by 3.6% at the moment.
Okay.
Okay, Seeking Alpha now has them. Okay, so they beat by 6 cents.
Mm-hmm.
The revenue was 44.06 billion, 69.2% year over year. They beat by 810 million.
Wow, that's a pretty good beat.
Yep.
You said 44.06 billion in revenue?
Yes, and 81 non-GAAP EPS, beating by 6. Nvidia's outlook, revenue is expected to be 45 billion. So that's $1 billion more than this quarter.
For what would be their Q2?
Yes, second quarter of fiscal 2026. That's a little less than the consensus of 45.66, and it's plus or minus 2%. The outlook reflects a loss in the H20 revenue of approximately 8 billion due to the recent export control limitations. Gross margins are expected to be 71.8, and 72. That's GAAP and non-GAAP gross margins, respectively, plus or minus 50 basis points. The company is continuing to work toward achieving gross margins in the mid 70%. Okay.
So this isn't.
And they talk a little bit about expenses and tax rates. So not much else other than that.
All right.
So it looks like their second quarter guidance is a little below.
So finally get the report. Okay, so revenue, like you said, 44.1 billion, up 12% from Q4. So sequentially, it's up 12%. And we're going to look at their quarterly revenue in a little bit. But year over year, 69%. That is strong. Nicely done. All right. So they're breaking out data center revenue, which I'm not going to get into that right now. So yeah, here's where some of these government controls cannibalize some of their revenue. And they had a $4.5 billion charge. So one question I had was, if they had these products, why couldn't they sell them to other customers? Why did they have to write them off? I didn't quite understand that. So, all right. So operating expenses were, so you see the gross margin number?
Yep.
That is a little concerning, right?
It's down. Sure is.
The Q1 of FY 2025, what that would be a year ago. It was at 78.4%. But the quarter that we're dealing with right now, Q1 of FY 2026, gross margin is 60%.
They're hoping to get it back to in the mid 70s range late this year.
Okay. All right. So that was a little bit of bad news.
Yeah.
The growth was excellent. Top line growth looked good. So revenue, we went over that. Gross margins are lower. Outlook. Okay. So revenue 45 billion plus or minus 2%. Okay. Okay. And I'm not going to dissect the revenue. It's just, it gets too messy at this point. All right. I want to look at just some balance sheet items and looking at cash. So this is April 27th, 2025. They've got a lot of cash. Nicely done. So cash is 53,691,000,000. Okay. So for some reason they have a little bit of debt there. 8,464,000,000. Okay. I'll need that for my valuation, so I wanted to note that. Now let's look at cash. So net income was good. It grew nicely. And looks like cash flows from operating activities went up, and they had some adjustments, so deferred income taxes. Accrued liabilities looks like had a very positive swing on free cash. That was the biggest swing. Okay. So a lot of cash in the quarter, 27,414 minus CapEx was only $1,227 million. So that is a really, really good number. They in the quarter did almost $26 billion of free cash. Incredible. All right.
Oh,
So looks like a lot of comments on Nvidia. Can you see the comments? I'm going to start working on the valuation.
okay.
And if you see any interesting comments, please read them out.
There was one from Saeed where he said, can we compare Nvidia with the giants in the past? And I think you did a little bit of that with
Sure.
Cisco. And if the demand in China is huge, then don't you think Nvidia has an advantage?
Yeah. All right. So the free cash flow before this earnings, I was projecting that we're going to do like 70 billion, and they may be ahead of that. When we look at their earnings and see how fast stock analysis updates their numbers. So this is still Q4, and I'm going to look at the last 4 quarters to get their trailing 12 months. I can do that kind of on the fly. So free cash flow, this quarter they did almost 26 billion. So we'd have to add 13.5, and we're going to add 16, 814, and 15,552. So the trailing 12 months free cash flow is $71 billion, $71.8 billion. Wow, that's a lot of cash. So
Do you
that's the
think
free
their
cash.
gross margin was impacted by the write-off?
Well, something impacted it.
Yeah,
It
Shadow
was a
Guy's
big drop,
asking.
by the way.
Yeah, Shadow Guy's asking that question. It could
So
be because of it wasn't because of revenue, because their revenue went up. So there's something in between the top and bottom line that hurt their gross margin. I suspect it's that write-off of the H20.
yeah, that's what probably was behind that. All right, so I calculated the trailing 12 months, which was 71,864,000,000. Now, one thing to consider as we look at these growth rates, how are we going to grow this forecast? Are they going to make this kind of cash forever? My expectation is no. It's just, it'd be really hard to imagine that. Now, they said they're going to do $45 billion in sales in Q2, right? And this is Q2. So you're going to go from 30 to 45. So that's going to be 50% growth in revenue, which is still going to be really, really good. So that's still going to be excellent. And their margins, so their gross margins have been in the 70s. They had that problem with the expenses, came down to 60. Okay. That's going to be they're probably going to get back into the low 70s in gross margins. Look at their profit margins. Amazing, 56%. Wow, that's amazing. Okay, all right, so I think I got that. Now I can update my forecast. So I updated the trailing 12 months and keeping the forecast, which I expect they can continue to drive up free cash flow. I wasn't too far off from where I had my free cash flow before. And if I grow cash flows in years 1 and 2 by 15%, we're going to get to $95 billion in year 2. But then I think that just the nature of their industry is this: they're building out data centers. Now, are they going to continue to build at the rate that they're building? I don't think so. I think at some point, AWS is going to say, okay, we have enough. We have enough so that we can satisfy client demand. Microsoft Azure would say the same thing. Google Cloud would say the same thing. So at some point, you're going to see this begin to come down. And that's why I put a forecast of in years 3 and 4, we're actually going to see free cash flows decrease by 15%. And then the long-term terminal growth rate will be 4%. So into the future, they'll grow from $68.6 billion into the future. A discount rate of 8%. They have an excellent balance sheet. No concerns there. Their cash on the balance sheet did increase to $53,691 million. Their debt came down a little bit to $8,464 million. So the value of all those cash flows is 1.5 trillion, and their market cap is 3,289 million. So there's, based on cash, and even if I said, hey, let's go with 0% growth there instead, and just kind of cap this level off, they can sustain this revenue level and sustain these cash flows. It still represents a premium on the stock of 38%. The value of the cash is 2 trillion, but the market cap of the stock is 3,289 million. Now let's look at earnings per share. And the earnings per share that's being forecasted, and Nvidia has plenty of eyeballs looking at it, right? 41 analysts are looking at the stock, and they believe it's discounted by 26%. The biggest bull on Nvidia thinks it's a $220 stock. The bears are at $100 a share. So overall, on average, it's discounted by 26%.
That's over the next 12 months.
Yeah, and that would include the quarter they just announced. So I guess over the next 9 months, if you include the first 3 months covered in today's earnings. So we're dealing with fiscal year 2026, which started, I guess, on January 27th, 2026. And the earnings per share consensus is they're going to do $4.43. So that's the consensus. And see this is consensus here. See, this is what I expect at some point. See the revenue growth?
Yep.
It's some analysts are already saying they can't grow forever. They're going to plateau, and then they're going to either stay there or even come down a bit because, and I'm not an expert on GPUs, but I would just say if you build like a super cluster of GPUs, let's say you're AWS, and you basically have whomever, builds a large language model with it or does whatever they need to, and they get done after 6 months. Well, you can use it for the next customer, right? You don't have to rebuy that super cluster. You can reuse those resources. And for that reason, I think the growth is actually going to begin to stall sooner. We're already in this year. I'm expecting the revenue to start stalling in 2028, potentially. So that's just out there. I think rational minds believe at some point NVIDIA's not going to grow any longer. If they do, they're just going to be taking too much of overall expenditures, and companies just can't afford to spend at these levels forever. They'll go bankrupt. So 443, they're going to grow that number, and they pretty much grew from last year 50%. Going forward, their growth rate's 28, 11, and then it's going to come down a bit. So I'm going to actually grow my earnings per share by about, I'm going to call it 20%. So EPS, I was expecting $4.61, but that write-off is affecting them already. So, okay, that makes sense. Now, Nvidia is a growth stock, so I'll go with 36 there. And if we grow by 20%, if you're an investor that looks at earnings per share, this stock looks good. But I'm an investor that looks at free cash flow. That's the principal decision that I make, is on free cash flows. But if you look at earnings per share, I'm not going to argue with these analysts that are saying the stock is discounted. On average, they're saying 26.39%. If I do my own calculations on earnings per share, I get to 30%. So overall, Nvidia is priced a little too expensively. If I give them the best forecast I can rationalize on free cash flow, and I don't think this is doable, I think they're gonna run into couple more big issues. I mean, we just saw how they were not allowed to sell a bunch of product to this Chinese company. How many more times is that going to happen? I don't know. I don't know when it's going to happen. I don't know, to whom it may happen. But I think the American companies have bought a lot of their GPUs, a lot of their semiconductors. We'll see. A lot to be discovered.
Tesla's building out a brand new factory in Washington.
Who is?
Tesla. I think they just announced that yesterday.
And their factory for
AI.
What?
An AI factory.
What are they going to build? Like robots or?
No, they're going to build an AI. I shouldn't say factory. You could make it like a data center, but they've got to buy a lot of GPUs from Nvidia for that new center that they're building.
All right, so Nvidia stock is up 3.46%, so the market does like what they're seeing. Nvidia over the last month, as mentioned, it's up nicely. Let me get rid of Microsoft and the S&P here. So for the last month, it's up 24%, and now it's up 3.44%. So it's a pretty nice rise. It's at $134 a share. It topped out. It's at has it reached above $150 a share?
Yeah, it hit 153. Let me look real quick.
But that was intraday, right? It didn't close above 150.
No, it didn't close. I can pull it up real quick.
So if we measure by close, it's
their highest close was 149.42 on January the 5th. 6th. And intraday they went to, I see 152.14, 153.12 on January the 7th. But then they ended up closing down pretty good at 140. So that was a big bearish engulfing candle that day.
So I think the analysis is, we get right back to where kind of the Nvidia investment lies, is if you believe Nvidia, I should say the marketplace for the most expensive semiconductors we have right now is going to continue to exist for them for the remainder of this year, and then calendar 2026, 2027, you're going to be fine. But if you're more skeptical, I think Nvidia is going to have, it didn't get to these low points because everybody was just completely believing in their business. And not to say, they're an awesome business, super valuable, not taking anything away from them. It's just, this proves that the market at certain times, profit taking, and people were debating, what's going on with Nvidia. One measure is, what big investors own Nvidia? How many of them, and what are they doing? Are they buying or selling Nvidia? So the bigger investors tend to be well informed. They really look at data closely, and 9 of them own Nvidia. I think the most held stock is Microsoft. That's the one that most of these big investors own. There has been a lot of selling of Nvidia, so I think there is a little bit of a concern that, hey, maybe they topped out, and where our future revenue is going to come from. If you look at how investors look at a stock, they're looking forward. They're looking 12 months, 24 months into the future, and that's what these big investors are looking at. None of the gigantic investors like Warren Buffett, Michael Burry, the biggest one, David Tepper, he owns it, and he reduced his position by a pretty good portion.
Yeah, that's a sizable amount.
Yeah. So, all right. So, all right. So we've looked at it. We've analyzed it. It's really in the hands of the investor. Will Nvidia continue to rise? My forecast, I'm going to trim down the free cash flow. I just don't believe. I agree with the analysts that were saying revenue is going to go down. And I actually think years 3 and 4, because what my forecast looks at is, this is the next 12 months, starting now, starting at this moment. We just updated this forecast based on the earnings we just grabbed. And I'm going to grow that at 15% gladly for the first 2 years. But then after that, I think we're going to see some erosion of that cash. And based on that, I think the stock it's priced pretty high, I should say.
Yeah, I'm looking at fast graphs at the moment, and they're seeing 437 in earnings for the fiscal year 2026, and then it's actually going to decrease. No, it's actually increasing 29%. So the growth is slowing down.
Mm-hmm.
So we were 46% growth in 2026. It's going to be 29% in 2027 and 13% in 2028.
Okay.
And that's compared to 2024, which their growth jumped 288% earnings growth.
Right. Yeah. So there's an expected limit plateau that they're going to hit.
Yeah.
They're going to get to a point and it's like, okay, no more revenue growth. And in fact, I would expect revenues to contract a bit. And competition. We saw that DeepSeek came into the market and created a lot of noise, because at the end of the day, the reason why Nvidia is in high demand is to build out AI use cases, applications, large language models. And what DeepSeek showed was, hey, they took an alternative path which didn't require all this really high performance semiconductors. They did it in a less expensive way and were able to achieve something that was comparable. Not as good, but comparable. And if you look at commercial use cases, I don't know that a lot of companies can spend billions on AI use cases, but they'd be willing to spend millions. And the DeepSeek solution opened up the option of, well, maybe we don't have to build everything with the highest performance semiconductors in the market. Maybe we can have, there's the premium, semiconductors, but then there's kind of very affordable semiconductors. And that's what DeepSeek kind of opened up. I think we're going to see more innovations like that come up and maybe disturb kind of like the expectation that, no, we're going to still need GPUs from Nvidia for the next 2 years. Maybe other companies like that copy DeepSeek and come out with better ways of building out AI models less expensively with less infrastructure. All right, so we have a lot of comments. I don't know how we can, let me focus on a couple here. Shadow Guy. The irony, I just switched to AMD graphics card. All right, go AMD. Yeah, and I think we were looking at the drop in gross margins. Let me think about that. Yeah, the gross margins would have been affected by that big write-off, because gross margins is basically all the materials, direct labor, direct burden that you put into the product. And if they had a write-off, it would have happened at that level. So I think that is why their margins went down. If that's just a one-time event, I think their margins will return back to what they have had historically. And thanks everybody for joining. I'm just going to pick out a few comments. So we can compare Nvidia, and I oftentimes kind of compare them to Cisco or Intel. And what happened in those situations, and I'll get back to them in a little bit, is that both of those stocks really sold off, and eventually they started to rise again. But for a couple of years, they were big losses for the investors. And I don't know that Nvidia went as parabolic as Cisco. Cisco became the most valuable company on the stock market, but so did Nvidia. I think at one point they were the most valuable company, and they got there really fast. So maybe that is a good compare. Let's take a look at that one. So back to Cisco. And I think Cisco is a good example because Cisco was really selling to commercial accounts. They were selling big infrastructure, big routers to build out the internet. And we're talking about the late 90s, early 2000s. And companies were buying it up because, hey, they had to build out the internet. You're a big corporation. You need to connect your customers to your website. You need to connect your employees, your partners. And they didn't have anything before. So this was all organic sales, and Cisco was selling into the market. And once it reached that peak, then the stock collapsed, even though revenue continued to grow. And in the case of Nvidia, we're seeing multiple sources say maybe 3 years from now, they won't grow. And I'm expecting that. Cisco, on the other hand, they continued to grow. Even though the stock collapsed, their revenue was higher year over year over year for a long time because companies still needed to buy more routers and build out their internet. Countries had to build out their internet. And that persisted, the revenue growth. But the stock over the long haul, eventually, if you bought way back in 2002 to 2025, you're up 501%. But if you bought anywhere near the top, you were really hurting. You're down 82%. While the company continues to grow their revenue, can expand their profits. That's what made this investment really upside down, is the company continued to operate really well, but their stock just got too expensive and then it collapsed under its own weight. So Cisco's a good compare if it follows a similar long-term chart. Maybe this happens to Nvidia, or maybe Nvidia becomes a very unique company where this doesn't happen. I don't think so. I think the tell for me is, look at the past year. A lot of fear is showing up. Investors are selling out at certain points. So Nvidia is going to continue to be a really interesting stock to talk about and follow. The last month and a week, stock's up 39%, and it's up in the after hours. So is it going to keep going up, or is it going to start to do what it's done after earnings. The last time a year ago, roughly, it went up after earnings, and then it came back down, and then it had this volatility, but within, let's see, from August 31st to August 7th. So that would be basically over the course of 2 months and a week, the stock found itself 10% lower than after it announced earnings prior. So we'll see. What do you think, Daryl?
Yeah, I have a cost basis of $70, so I think I'm okay.
Yeah, you're going to be all right. Nicely done. So just looking back, when did you say you started to buy into Nvidia?
November of 2023.
So you were around here, right?
I was buying at all-time highs.
But no, in November of 2023?
Yeah.
Okay. And from there, it's up nicely, 173%. So
Yeah, what I was watching for and what I was looking at is that consolidation from about June, because I do a lot of technical analysis. So from June to that November, they were pretty much trading sideways after a pretty good run. So as soon as it broke out above that consolidation range, that's where I started buying.
You want to share your screen and take us through your charts?
Sure.
And I know it's your first time on the software, but you share your screen and then I'll put you on the stage.
Okay, let's see what I want to share the entire screen. That's the easiest. Okay, so
right.
I'll step back to my. I just did a
You
video.
were live. Go for it.
Yeah, I just did a video on this, so I should have everything pretty much right here in front of me. Well, maybe not. But anyway, if I go back basically 3 years, I was basically buying when it broke out about right here. When it broke out, that's when I started buying. And if you look at all of my trades, all the ones that are in this shaded area, I've actually sold those, so I traded in and out of them. I still hold the shares that I originally bought in November of 2023. I still have those. So all these that are in white, I still own. Here's my gain on those. So 227% on that first tranche that I bought. And then I traded in and out. So the ones that are in red, I actually took a loss on those. I was in that same camp where you were pointing out fear, and I had bought these at fairly high prices at the time. So as soon as it dropped down, I took the loss and walked. Then I ended up buying back in. So I've made a total of 28 trades on this. 22 of those are winning trades. 6 are losing trades. So that gives me a win rate of 79. And I've made $8,000 on those and lost 600 on the ones that I sold without a loss. So basically for every $1 I lost, I made $3.53.
Good job. And looking at the earnings, and I don't know if you've had enough time to process it, but what's your mindset around Nvidia? How would you invest in it going forward?
I actually trimmed it last Friday. I was expecting it to take a hit after the run we've had. So we just go back to like 6 months here. We basically went on from the very bottom to the top here, it's like 55% from April 7th, 85 to 135. I really expected it to turn around, and all my technicals were telling me we were overbought. We had a PPO that had peaked out and was starting to turn over. We did have really good accumulation this whole time for this past year. The stock has been accumulated, so that was really good, but I did start seeing a turnover right here. We have a lot of money flow coming into it since the low on April 7th. So sometimes when retail traders get scared and sell out, a lot of the institutional buyers step in. So even though this price was coming down, people just started buying it like crazy here. So I'm gonna hold what I have. I still have the 115 shares. I'm gonna hold it, and I'll continue to watch these technicals and decide what I'm gonna do. But it looks like they're up at the moment, 5% or so. We'll see how that holds tomorrow.
Looks good. Looks really good. Well, good job on Nvidia. You played it well, and it looks like it's always hard to get every move correct, but this week Nvidia's done really well. For the last 5 days, stock's up. Well, I should really measure it from this week. So it closed on Friday at $131 a share. It's only up 2.7, but then you got to add the 5% that it's up in after hours. So 7 to 8% higher than it closed on Friday. That's really good. Perfect. So that was excellent, man. We covered Nvidia. I think we covered all the bases on Nvidia. I kind of gave a little bit of the value investor perspective. Based on cash flows, I can't get to their stock price. Based on earnings per share, I can definitely get to their stock price and actually show that the stock can go up higher. You've played the trades really well, so I think we covered those bases. You want to handle CRM, Salesforce now?
Sure, that'll be good if you want to pull those up.
All right, so let's take a look. Let's see if they've got the earnings on their website. Here it is. Okay, so first quarter revenue up 8%, and this is a big company, right? Not as big as Nvidia, but it's big. Revenue of almost 10 billion, so they grew at 8%. That looks good. 8% for a company their size, that's a good revenue growth. Subscription revenue up 8% as expected. Okay. So cash flow expanded by 4%. Okay. And they are raising guidance. Okay. Of course, they're going to highlight data center and AI. Salesforce does have kind of a cloud business where they do cloud infrastructure for customers. Not a big one, but they do have cloud infrastructure, and they have a pretty strong business when it comes to AI. I think they call it Agent Force, and they intend on providing AI to customers to help with customer service calls, everything dealing with customers, where historically customers call and they talk to a human being. Well, with Salesforce software, you can deflect a lot of those calls and it goes into an AI experience, which would be less expensive for the company that's using that technology. So all that's good, as well as creating AI experiences for employees or customers to get the right data with this AI application, similar to ChatGPT or Gemini or whomever else, how they serve up the right information based on the questions you ask, or you can even speak to it. I've been talking with Gemini as an example, and that's been kind of cool, having a conversation with Gemini. So that looks good. So guidance, we talked about that they increased it. Good. So for the year, they're going to grow 8 to 9%. That's very good. Let's look at their historical growth in a little bit. Let me just note a few pieces of information I'm going to need for my valuation. Operating margin, 21%. All right. Let's see if they give us their financials down here. Yep, there they are. All right, so their cash increased to 10 billion 928 million, and marketable securities 6 billion 480. So they have a fair amount of cash on the balance sheet. Okay, let's look at debt. So non-current debt 8.4 billion. So it stayed the same. Okay, good. So they have more cash than debt. Solid balance sheet. And it's interesting that a lot of technology companies, this is a software company, they don't carry net debt. And you see like old school companies, industrial companies, they carry a lot of debt. Even like the communications companies like AT&T, Verizon, they carry a lot of debt. And I always think it's a huge liability for them. And they have to pay the interest. All right, so now we're dealing with cash flows. Cash flows came in a little bit higher for the quarter. They came in about $229 million higher. And what was their CapEx spent? Capital expenditures came in a little bit higher. So overall, their free cash flow is a little bit higher for the quarter than it was a year ago. So that looks good. And if I were to go, they said they grew their cash flow by 4%. So I'll note that. All right, so let me take a look at Salesforce, the valuation I have for them. So I had free cash flow growing at 10%. They're growing at 8%. So I'm going to trim that back to 8% growth rate. And I'm going to trim that down to 8%. So the cash that I expect, and Salesforce is a more consistent company, right? It's not like Nvidia that we just saw where you see 240% growth. No, they're growing 8% on a big number. Okay, that's good. So we have a smoother data set going forward. So we're growing at 8% for years 1, 2, 3, and 4, and then terminal value will grow at 4%. We're going to discount all those future cash flows by 8% to get to an intrinsic value of $348 million for all those cash flows that we expect in the future. The cash on the balance sheet, they have good cash balance. So 10 billion 928 million plus 6 billion 480 million dollars of marketable securities. So that's much higher than their cash, so they can pay off debt. It looks like they're going to acquire a business in Informatica. I don't know how much of that they could pay cash, by the way, for that business. Not sure they're going to do that, but they could if they wanted to, because they have the cash right here. They could just, transact it that way, but they're probably going to take some debt. So overall, based on cash, the Salesforce stock looks to be discounted by 26%. Now let's deal with earnings per share. Let's see how that's looking and see how fast Stock Analysis was able to update the information for earnings per share. So 35 analysts cover this stock. The optimistic analysts think it's a $450 stock. Most bearish analysts think it's a $200 stock. On average, it's discounted by 27%. So their fiscal year is similar to Nvidia, okay, because they announced today. Makes sense. And you see this growth rate. This is what I talk about, smooth numbers. See how you have a growth rate that's a little more consistent, 8.7, 9, 10.7, 7.5. So these are smoother numbers. And for the full year, they're going to be at $11.26. This is going to be their EPS. They're expecting to grow that by 12.4 and then 16.2 and then 6%. So I'm going to grow it by 9%. I like to be conservative. PE is expected to, come down as the earnings per share goes up. Either that or their stock price goes up, so it stays at around 24, 25 PE. All right, so update this guy to $11.26, which is better than I had before. I'm going to grow this by 9% and change this to 2025. So overall, Salesforce is, discounted. Now, it's not a wild discount. It's a decent discount. It is, I like the expectations that I have on the stock. It's going to be a smooth grower, consistent grower, profitable. Let's see how the stock's been performing for the last couple of months. So for the last month, it's up 4%. Year to date, it's down. This is one of the reasons I started to buy Salesforce, is it sold off really hard, and I thought it was a good buying opportunity. So I started to buy around here, and by dollar cost average in investments. So I'm doing well with the stock and think that it could go up even higher, maybe another 10, 20% for the remainder of 2025. So I'm glad I bought the stock. It's good to see that it's up a little bit. It was up more earlier. Maybe the earnings call is talking about stuff that investors don't like, but that is Salesforce.
Yeah, it peaked as high as 294 in the after hours, and it's sitting at 279 at the moment.
Yeah. Well, it's not a good sign when it peaked at a higher amount and then it starts to decline. We'll see how it trades tomorrow. Tomorrow is really, it's almost like if we could fast forward from now 24 hours, we'll know where Nvidia is going to be priced for the foreseeable, next month or so. But I think a lot of things are going to happen on both Salesforce, but more notably is Nvidia. Because I've seen Nvidia after earnings, the stock goes up 10%, then the next day it trades down 5%, and I'm like shaking my head going, what just happened? I thought the earnings were good. I thought everybody was happy, and then it sold off. So we'll see how it trades tomorrow. But overall, this is good news. Nvidia had really good earnings. Salesforce had good earnings. It's going to help keep us at a good place for the market overall. Even though today was a down day, when I look at the month, this isn't perfect, but the S&P is up 6.5% for the last 30 days. It's been a good month. We have 2 days of trading. We just saw the biggest stock that was going to announce earnings announced, and it was generally a very positive report. So I think we're going to end the month on in a positive area, heading into the month of June.
June, I expect June through the middle of the month to be pretty good. as we start getting towards the end of June, we're going to start losing the buybacks. So companies will start closing their buyback windows. So we'll see some challenges after the 15th or so.
Yeah, good point. Very good point.
Buybacks are an actual huge driver of the prices.
Yeah. Interesting. Okay, good. Well, we've been streaming for about an hour and 10 minutes.
Yeah, we don't need to look at HPQ, but Sergio mentioned earlier that HP's down a lot.
Really?
I just did a quick look, and it's down 18% right now.
Jeez. Oh man. Glad I'm not in that stock.
I have a covered call on that I'm going to make $19 on, but lose $1,000 today in my holdings. So that doesn't quite add up.
No. Well, this is a smaller cap, 25.6 billion. I mean, HP is a legacy company, and what I mean is they used to make a lot of money on printers, but man, I think I print once or twice a month now. I don't know how many times you print.
That's me as well.
And
if that.
And when I get asked to print something, I do it with a bad attitude. I'm like grumpy. Oh God, why do I have to print? It's 2025. Why can't I just email this thing to people? It's usually something I have to sign and then scan and then send it to somebody. But that part of the business, I mean, it doesn't have a good future. It's not going to do much in the future. I would say their PC business might be okay, but the printer business is pretty much a part of the past. So this one's going to have a rough night.
Sure is.
Synopsys is a company that does design automation software. So you design your semiconductor, your integrated circuit, and you need to test it to validate, okay, we think it's going to do this from a performance standpoint, and it validates it. So it's an infrastructure to semiconductors. And it was down big. This is the news I was talking about earlier on our stream, that the news that the current US leadership is saying, hey, we don't want you selling your technology to Chinese customers. And that really affected the stock. They announced their earnings after the market closed, and it looks like the market's happy with the earnings. So this is a pretty good sized market cap, 70 billion. All right. So, man, that was fun. Let's do this again, Daryl.
Okay, sounds good.
Let's figure out the next watch party we want to have, and let's do this all over again. Everybody, thanks so much for tuning in. I appreciate it. And what I'll do is in the comments, I'm going to add Daryl's YouTube channel. Please stop by his channel and like his videos, subscribe to his channel. And if you haven't done so, consider joining this channel. We talk like this on investor calls. We also have a Discord server going where we talk about stocks. Consider joining this channel. I think you'll get a lot of value from it. You get access to the tools that I use to value stocks based on free cash flows, earnings per share. There's a lot of other perks that you can take a look at if you visit the website. So take a look at your convenience, and I appreciate it. And thank you so much for tuning in. This was the most successful live stream I've had as a YouTuber, and it was great to have you. Jamie All, thank you for joining, and I appreciate your support. And Daryl, have a nice afternoon. I will be in touch, sir.
You do too. Thank you, everyone.